Have you ever felt like the stock market is a high-stakes casino where the house always wins and you are just a guest waiting to lose? It is a common feeling, especially when you have spent 40 years building your nest egg and now find yourself looking at a world where costs are rising faster than ever before. You have worked hard, you have sacrificed, and you deserve to know that your future is secure without having to worry about every single headline on the news. The truth is that successful investing in your golden years is not about guessing or following the latest trend on social media. It is about having a clear strategy that protects what you have while allowing it to grow at a steady, peaceful pace. Experienced investors who have survived every market crash in history usually rely on three core pillars of wisdom: fundamental analysis, technical analysis, and macro analysis. By the time we finish our conversation today, you will understand exactly how each of these works and how you can use them as a shield to protect your financial independence. This is not about getting rich overnight, because we both know that those promises usually lead to heartache. This is about the quiet confidence that comes from knowing your money is working just as hard as you did during your career. Let us start with the first and perhaps most important strategy for long-term peace of mind: fundamental analysis. If you have ever heard someone say they invest in companies and not just pieces of paper called stocks, they are talking about fundamental analysis. Think of it as looking under the hood of a car before you buy it to make sure the engine is strong and will not break down on a long trip. As the legendary Warren Buffett once said, you should never invest in a business you cannot understand. Fundamental analysis is the process of figuring out what a company is actually worth, regardless of what the noisy stock market says on any given day. You are looking for answers to simple but vital questions. Is this a healthy business? Does it make a real profit? Is it growing? Most importantly, does this company provide something that people will still need 10 or 20 years from now? To find these answers, we look at two different areas: the numbers you can measure and the qualities you can feel. Quantitative analysis is all about the cold, hard numbers found in financial statements, like the balance sheet and the income report. You want to see companies that have very little debt and plenty of cash in the bank to weather any economic storm. As we look toward the year 2026, focusing on companies with stable earnings is more important than ever, especially with healthcare costs projected to rise significantly. But numbers do not tell the whole story, which is why we also use qualitative analysis. This is where your life experience becomes your greatest asset, because you understand things like brand strength and customer loyalty. Think about a company like Netflix or a trusted healthcare provider. Even if the economy slows down, do people still value their services? Is the leadership team honest and experienced? Does the company have a unique advantage that others cannot easily copy? When you find a company with strong fundamentals, you are not just gambling. You are becoming a part owner of a high-quality business. This strategy is perfect for those of us who want to sleep soundly at night, knowing that our wealth is built on a solid foundation. However, even the best company in the world can have a stock price that moves up and down like a roller coaster. That is where our second pillar comes in: technical analysis. While fundamental analysis tells you what to buy, technical analysis helps you understand when the timing might be right. Instead of looking at financial reports, this approach is all about reading the rhythm of the market through charts. Think of a stock chart as a map of human emotion, showing the battle between fear and greed in real time. Technical traders focus on price and volume to see where the big money is moving. Everything starts with the price trend. If a stock is consistently making new highs and staying above its previous lows, it is in an uptrend, which is like a steady wind at your back. If it is struggling to stay afloat, it is in a downtrend, and that is a sign to be cautious. Two key concepts that every wise investor should know are support and resistance. Support is like a solid floor under the stock price where buyers usually step in to prevent it from falling further. Resistance is like a ceiling where sellers tend to take their profits, making it hard for the price to move higher. Understanding these levels can help you avoid the common mistake of buying at the very top or selling at the very bottom out of panic. One thing to be careful of is what traders call a fake out. This happens when a stock looks like it is starting a new trend, but then quickly reverses, trapping people who acted too quickly. Technical analysis is a visual tool that allows you to see the big picture without getting lost in too much paperwork. It is a way to respect the market's current mood while staying disciplined with your own goals. But there is one more layer we must consider, and that is the world outside of the stock market. This brings us to our third pillar, macro analysis. Macro analysis is about stepping back and looking at the entire forest instead of just the individual trees. It focuses on the big forces like government policies, global events, and the overall health of the economy. In the year 2026, one of the biggest forces you need to watch is the Federal Reserve. The Federal Reserve controls interest rates, which are essentially the cost of money. When interest rates are low, it is cheap for businesses to grow and for people to spend, which usually helps the stock market rise. But when interest rates are adjusted to fight inflation, it can slow things down and cause stocks to take a hit. As we move forward, the Federal Reserve is expected to find a new balance, and knowing how this affects your monthly bills and your savings is crucial. Inflation is often called the silent enemy of the retiree because it quietly eats away at the purchasing power of your hard-earned dollars. Macro analysis helps you identify which parts of the world or which industries are best positioned to thrive even when inflation is high. We also look at things like the unemployment rate and consumer confidence. If people feel good about the economy, they spend more money at the companies you own through your fundamental analysis. Geopolitical events, such as elections or international trade changes, can also move the markets very quickly. By understanding the macro environment, you can position your portfolio in safe harbors before the storm arrives. It allows you to see the big picture of the whole economy and global markets, which is vital if you invest in index funds or mutual funds. So, how do you put all of this wisdom together? Think of it like building a sturdy home for your retirement. Fundamental analysis is the solid foundation and the quality of the materials used to build the walls. Technical analysis is the timing of when you choose to build, ensuring the weather is in your favor. Macro analysis is the environment and the neighborhood, making sure you are building in a place that will remain safe and valuable for years to come. You do not have to be a professional trader to use these tools. You just need to be a consistent and patient observer of the world around you. The goal is to move away from the stress of the unknown and toward the peace of a well-thought-out plan. Remember, you have already done the hard part by saving and building your life. Now, your only job is to be a good steward of that legacy. Instead of chasing the newest and flashiest investments, focus on what truly matters to you and your family. Financial security is not just a number in a bank account. It is the freedom to spend your time with the people you love without fear. It is the ability to pay your medical bills, travel to see your grandchildren, and live a life of independence. The most successful investors are often the calmest ones because they trust their process and ignore the noise. If you found this conversation helpful today, I invite you to join our community of like-minded individuals who value wisdom over hype. We are all on this journey together, learning how to protect our Phuoc Lanch and ensure our future is bright. Please consider sharing your own experiences or questions in the comments below so we can support each other. Every small step you take toward understanding these three pillars is a step toward a more yen and secure life. Stay consistent, stay curious, and always prioritize your peace of mind. I look forward to speaking with you again very soon. May you find the clarity and the confidence you need to make the best choices for your future. Take care of yourself and your hard-earned legacy.